Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk here for this Wednesday, July 28th. I am your host, Jesse Allen. Thanks for joining us. The show today brought to you by our friends at GrowMark FS. You can find us online at markettalkag.com. That's our home on the web, markettalkag.com. We have a lot to talk about in the trade today. Let's not waste any time. Bring in our good friend Mike Zuzolo with Global Commodity Analytics, fresh off a road trip. Mike, it's great to have you on the show here today, my friend.
Great to be with you, Jesse. Thank you. Yeah, just got back from the Central Corn Belt crop tour, and I thought it was a very useful tour and a very good experience from a standpoint of trying to hone in on the national yield for the corn and maybe get a little bit of a sneak peek on the national yield of soybeans. And I guess broad brushing it, Jesse, I guess my mindset is that I can't remember a time period where I agree with USDA's crop conditions ratings any more than I do this year. And that's after following them for a better part of 20 years, 25 plus years. And I feel like their crop ratings are spot on this year. So it really calls into question still the national yield of 179.5 in corn and 50.8 in soybeans. Same thing that we talked about last week, but with a lot more knowledge and a lot more in-field understanding under my belt.
Well, I want to pull up a couple pictures I know you shared with your clients and subscribers, and it's kind of you can kind of walk us through some of the things you saw. But I know the general idea I've heard you said, I agree with you. It's matching up with the crop progress numbers from the USDA. Illinois looking good. I know this was a picture you had, Sumner, Illinois, there. Looking really that corn crop looking really, really strong there, Mike.
Yeah, and this is really interesting because as soon as we crossed from Hannibal and the Mississippi River on that northern route and got into the state of Illinois, all the way to Sumner and Effingham, Illinois, which is right on I-70, right around there, I think that the record-setting yields are almost assured at this point based upon the samples I looked at, and the size of the ears are just massive this year, and the population numbers, I don't think I've ever seen them as high as they are right now. And so a good solid 1/2 to maybe even a little bit over a half of the state of Illinois in terms of geography, I think is well on its way to a record yield. But in that Sumner, south of Sumner area, as I crossed south of I-70, US 70, that's when things started to really kind of unwind in terms of variability in crop and a lot of maturity issues. 3 different crops essentially being grown right now in the southern part of Illinois. And so while I think Illinois can have a record as a state yield, I think it's quite a ways away from being able to tie that southern half of Illinois to the central and western half.
I'll pull up this picture as well. I believe this was Illinois, yes, with beans. And I'm starting to wonder too. We heard a lot about rain in the eastern corn belt giving us disease pressure. Did you see any disease problems in beans on the eastern half?
Yeah, I mean the beetles were starting to come out pretty nicely, and I think the disease pressure is only going to get worse with the heat unless we see a lot of rain come in. There was a lot of activity in bean fields getting sprayed. Corn fungicide still going down. Japanese beetles are bad everywhere, corn and beans both, and all over the corn belt and bean belt this year, Jesse. But yeah, I think this Lawrenceville, Illinois picture of the soybean field, I would say to you that a strong 30% of the soybean fields in that area, all the way back up towards Effingham, and even as you get into Missouri and the eastern half of Missouri, you've got some real water damaged crops, and you've also got discoloration in the soybeans. And I think this is one of those years where because of the size of the soybean crop potential going down, I think in the United States, I'm really going to back off the idea that the soybeans can lead us lower at this stage of the game, because it doesn't take more than a bushel and a half yield reduction to get us back below 125 million bushel carryover, unless USDA starts chopping the demand block really hard and chopping the demand back really aggressively. So I think the soybeans, while they still probably have a little bit of premium in them, I don't think they have nearly as much weather premium as they maybe need to have if we don't see this weather change in the Western Corn Belt and in the Plains states here in the next 10 days. So just to cap off that mindset, while I didn't go to North Dakota and South Dakota and Minnesota, those three states continue to be the epicenter of the crop problems. And we need Illinois to offset that. We need Missouri and Indiana to offset that. And I'm really dubious to see if we can do that at this stage of the game, because these weekly crop conditions reports came out for the very poor in Minnesota. They were in the 20 to 21% for corn and beans. For South Dakota, 25 to 26%. And in North Dakota, we're now at 39 to 41%, very poor combined in these states. And so we are seeing these corn and bean conditions drop as rapidly, almost as much as the spring wheat at this stage. So that is where time is running against the central Illinois, southern Illinois crop and the Missouri crop.
I want to pull up this chart as well, and we can talk a little bit about this. We talk about soil moisture and looking at all the troubles with the crop. Walk us through this chart a little bit and tie this into some of the things that you saw and what we're hearing, Mike.
Yeah, I think the biggest thing that I looked at here in this is, and this is a SMAP map, and what SMAP is that's a soil moisture active passive, and that's simply a satellite that NASA threw up in the air in 2015, and it's been a very useful tool as we get into the later part of the 2010s and early 2020s especially. And this reflects the percentage of moisture, of topsoil moisture in the first 1 meter of the ground. And what I like about this is this is the Midwest only. And so this would be Illinois and Indiana and just the Midwest states. And what it shows pretty clearly is, and I think this is where you kind of push this into the crop conditions and the crop tour I just came off of, where it matches up, where the bright purple line with the little dot at the end is where we're currently at. We are as low as we were back in 2018 at this stage of the game. And you can see by the orange line, which is last year, how much different we are, how much lower we are in moisture levels as we head into the end of July, 1st of August. And so if that trend continues, then we can go well below where we were in 2020 and maybe even match up all the way into mid-August with that yellow line, which again is 2018. So we have to go back and think about, well, in 2018, our yields were 176.4, and I think we're a little over 50 bushels in the soybeans. And so I would put those now just as kind of the top end. And I think I would also kind of look at the 2017 time period as another similar year, because we're not too far from where that was going into the 1st of August. If we just flatline out, we did a 176.6 yield, I think it was in 2017, and a 49.3 yield in soybeans for 2017. So I think we're still underneath USDA's estimates, and that's probably where I'm going to come out at the end of the week when I give my clients and subscribers my estimates once I pull back a few more years from the road trip.
And I want to just pull up one final picture, kind of shows maybe some of that water damage areas. This was in Missouri on your trip, Mike. And, I think that harkens back to, we got some of those areas where they just got too much rain, and we're going to see some spots like this, especially areas of Missouri, southern Iowa. I've even heard Indiana. There's some spots where we could see some areas like this, maybe just with some uneven growth or drownouts.
Yeah, and this is where the heat and the dryness from here on out would be a real negative force. You would think that you would want that crop to dry out at this point, but not from what I saw. You really want the rains to come and the heat to back off, because you've got a one field, the same field, tasseling and also trying to get caught up to the other part of the field. And that was, again, probably about 20% of the fields that I saw in southern Illinois, and probably more like 30 to 35% of the fields that I saw in the whole eastern half of Missouri, because I came back from on the way back west. I went south and went to St. Louis and then drove up Missouri 61 up to Hannibal and got back on my original track. But this crop mindset, this did not change as far as the pictures and the way the fields looked. And it was very valuable to get out there and look at this picture, for instance, was over an overpass, and you could really get a good idea of what it would look like in a drone. I've had clients, in fact, Jesse, call me this week after seeing this picture and said, I've been flying drones. I'm seeing this in my corn. I'm seeing this in my beans. This is really, you really captured what was going on in my fields that you really can't see from the roadside.
Very, very true. I know we hit on the Dakotas, Minnesota a little bit. I know you didn't take a tour there, but I know the Wheat Quality Council tour is going on there right now, and we've been getting the headlines from there. We've been hearing all the stories about the poor ratings of the spring wheat crop, and essentially it seems like getting that confirmed, and that's starting to be parlayed in the market trade with spring wheat leading to the upside here on Wednesday, and the Chicago KC wheat following along as well. But that seems to be the case. We're getting some confirmation. Is that what you're hearing, Mike?
Yeah, I think what we talked about last week or the week before about the possibility of spring wheat going on up to $10 level would not be surprising to me at all, fundamentally speaking, given that the crop tour started out in the best part of North Dakota. North Dakota's 30% of the spring wheat crop, and they couldn't get any better than a 29.5 bushel yield when they did their first day. And we're seeing more wheat going for straw than we are for going for wheat. In other words, the heads just aren't there. They're not filled out. And so they're going for fodder and livestock feed and just trying to get the straw and bale it. And so I think this is where the wheat becomes, again, kind of like soybeans and not unlike what we've talked about the past couple of weeks. Wheat's not any longer, I don't think, Jesse, a negative feature in the corn market. It should be a price supportive feature in the corn market. And I think it really goes back to what have we done in the price action of wheat since that last USDA report where they chopped the yield so much because of the spring wheat problem, and probably confirmation of this wheat tour that USDA wasn't too aggressive by chopping that wheat yield so aggressively. Well, wheat's essentially gone down since that flatlined or gone down since that last USDA report. So I will stand by what we talked about using wheat, using corn, using beans in the crop tour. I don't think that most of this break to the downside in the corn especially is weather related. I think we're pulling weather premium out, but they're not looking at it as weather premium. I think they're looking at it as lost demand premium, whether it's because of ethanol, whether it's because of COVID fears, whether it's because of the Federal Reserve policy. I think there's some demand issues out there that the trade is very, very worried about, and they're not willing to take and put any more premium in the futures markets. The funds aren't participating in this market yet, while the cash market says we don't have any corn to sell by the farmer and we don't have any beans to sell by the farmer. In fact, ADM in their conference call and their release of their quarterly earnings this week posted what they thought that was sold out by the farmers for the 2021 time period. We're into the mid 90s, like 95, 96% sold out in both corn and beans by their estimates. So I just don't buy into the idea that this is a weather market at this stage of the game, that there's something else going on, and we're going to have to find out what it is. But in the meantime, the cash market is a more accurate portrayal of what the price should be.
I like your explanation of that, Mike, because I've hearing from a lot of folks here this week that they say, well, quarter beans can't make up their mind because the weather forecast can't make up its mind, and trying to fight between the bulls and the bears. But I like your explanation of that, because it just, the longer this goes on and we just keep having basically a sideways range, it doesn't feel like a weather market, even though that's the sexy headline for everyone to talk about, so to speak.
Yeah, and well, two things there. I mean, the crop conditions can continue to just decline rapidly, and so you can't get around that, and you can't say, "Oh, well, that next rain's going to help us," because we're getting to a point now in the corn, especially. I've seen pictures from Cedar Rapids, Iowa. You probably have too, because you're from Iowa. There's some pretty nasty corn up in Iowa right now. The trade's really not talking about, but yet the crop conditions are showing it. I'd say the second thing that's happened here this week that I think's given me a finer point on the analysis is we had the Fed policy statement come out just today before we went on the air, and they said, quote, "The path of the economy continues to depend upon the course of the virus." That tells the funds and the investors and the inflation bulls out there, don't go after commodities right now. Just stay on the sidelines because we're getting more mandates now. I'm hearing now this afternoon that the whole federal government may be mandated to get either vaccinated or wear masks. We're just not sure where we're headed. So that just keeps money on the sidelines. The second thing, and I think this is really tied into what we've talked about this summer a lot, Jesse, is the IMF came out with their latest World Economic Outlook, and they pulled down the World Economic Outlook expectations for this year's growth in the world, but they raised it in countries like the United States. Well, what happened there? Well, the IMF says economic prospects have diverged further across countries since April. Prospects for emerging market and developing economies have been marked down for 2021, especially emerging Asia. That's your commodity bowl right there, is emerging Asia. And I think that's really at the heart of what's going on right now. And that doesn't make me feel good. It makes me very concerned. And it keeps me on the path of, if we get rallies to overvalue levels, we hedge those rallies. But it also makes me think we're not counting supply into this mix yet.
Mike, I want to leave some time for livestock today. Great thoughts there on the grain markets and your crop tour as well. But looking over at cattle here today, more of a mixed tone. Just couldn't seem to really capitalize on maybe a little bit of lower trade in the grain markets, a little pressure there. But looking at cattle, I know it seems like feedlot country, we're trying to hold out for higher prices this week. What are your thoughts on this cattle trade as we work through midweek?
I think it's going to be hard to get higher prices at this stage of the game, Jesse. I think we've had the run. I mean, you and I have talked about the supply side and how we're tightening up supplies and maybe doing it a little bit earlier than expected because of the weights. Well, the cattle on feed report showed us tighter supplies than what the trade was expecting. The cold storage report showed us that. The semi-annual cattle report, which was so important to this market, in my opinion, in the long term, also showed a tighter supply. What I noticed was really interesting was the all cattle and calves number coming in at 98.7, and then the calves under 500 pounds coming in at 98.6. A, they were almost identical, which is very interesting to me. And B, they were both about 1% lower than the average trade guess. So this lower supply, I think, has been validated, confirmed, and traded into the market price. And I can tell you, ever since 2017 and the high put in there at about 130, it's extremely hard for the fat cattle and lead month futures to go above 125. And so I really feel good about that overvalue level in August fats at 124 and a quarter. And you've got the October fats at 128.60, 128.70. And then you've got the D's fats at 133.50. So I get up to that overvalue level in August. I'll hedge all the way through from August into my December marketings because I just think this COVID return and mandates, and St. Louis is locking down again. I just feel like it's worth hedging because the profit's there, and just get some puts bought for the front end contracts and maybe short the board in the December if the puts get too expensive. So I'm really eager to get that done probably before we talk next week.
And on the hog side, seems like a little bit of consolidation early this week, and then today we get some bigger losses in the market, some triple-digit moves to the downside. What are your thoughts on the hog market today?
Hogs are puzzling me right now. I'm wondering whether we're not erasing or unwinding the hog cattle spread here, because we made that 10-year low back in May. And now all of a sudden the cattle are back premium to the hogs, and it doesn't look like there's any stopping them. It seems like there's a real momentum there. And I say that because the hog supply demand fundamentals actually look supportive. We've got the cutouts still very strong, bacon still on fire, it looks like to me. We had good pork exports, and I think with this major flooding in China's grain basket of the Henan province, it's a huge livestock area. I've seen news reports now that would suggest that there's enough disease pressure from dead animals that they're going to have to call major herds at this point, including hogs. And so I think the supply-demand fundamentals don't quite add up to the major price break we saw here at midweek, and I'm wondering if it's not just the funds unwinding spread. So I'm lukewarm hogs, not a buyer nor a seller. Just want to stay current until I see the next pork export report on the weekly sales data.
Mike, great insight as always. Any final thoughts or anything you want to reiterate for us today?
Yeah, we're still on track for watching that dollar with what we talked about on the macro side, Jesse. That's our best gauge. We just got done making a multi-month high in the copper We didn't see gold follow along with it, though. We've got Bitcoin on fire again. It seems like there's some inflationary expectations in this market floating around, but we can't get a clear picture. And I think that dollar really needs to pick up the trend. And as long as it stays lower, I think we're in good shape from a standpoint of our competitiveness around the world once, South America and the Black Sea get done selling, because they've been selling a lot lately and they've been near record or record exports out the door of most of the major grains.
Well, Mike, I know folks can get your analysis and get your help and advice by going to your website, globalcomresearch.com, and signing up for that free trial of the newsletter to start, can't they?
Yeah, it'd be a great time to do it too with what's at stake here in the next 30 days. But thanks for having me, Jesse, as always.
Of course. Globalcomresearch.com is the website. Mike Zuzolo with Global Commodity Analytics, our guest today here on Market Talk. And this has been the Wednesday, July 28th edition of the show. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.